Alex, what do we have on the editor's cut today?
You know, I'm very tempted, Neeraj, to introduce today's editor's cut as a boxing match, or rather two boxing matches, because we're talking about two sets of stocks. So let me do just that. Ladies and gentlemen, presenting for your not necessarily entertainment, but hopefully giving you actionable insight this morning. Two prize fights, one in the automotive space and one in the ER&D space. In the light blue corner, we've got Tushar Deep Singh, apologies. In the light blue corner, we've got Tushar Deep Singh. And soon, in the dark blue corner, we've got Sameera Nalwala to talk about Tata Motors. Unfortunately, see, I'm focused so much on
every day.
I'm focused on the commentary here, but so take that.
Sorry, should I move behind?
No,
I don't want to be caught in the crossfire.
Neeraj is going to be the referee in this particular match. So we've got Tushar as well as Sameera that are going to talk about Tata Motors and Maruti Suzuki this morning, because you might have heard, of course, that Tata Motors has eclipsed Maruti Suzuki on the market cap front. But where do we go from here? Which stock should you bet on, and what are the factors that will determine the fundamentals going forward? And then in another category, and we're talking about maybe the welterweight category here, we're talking about ER&D companies. On the one hand, you have KPIT Technologies, 5% yesterday, but in the context of the 115% it's gained over the last 1 year, it's not very much. At the same time, Tata Technologies, on all the metrics, they're looking comparable. Which one should you bet on? Let's start with Tata Motors versus Maruti Suzuki. Who wants to start? Who wants to throw the first punch?
I'm going to go because I think Tushar is going to shut me down very quickly. But very quick take on what we've seen, and this is out in the open. So there's no intellect here I'm bringing. All I'm saying is this is what's happened. It's a season of milestones, right? We had our markets become the fourth largest country by market cap in the recent past. In a similar way, you've had Tata Motors that has, for the first time in 7 years, taken over the market cap of Maruti to become the largest automaker in the country. Now, the combined market cap of Tata Motors and Tata Motors DVR is marginally better or higher than what Maruti currently quotes at. Look at what happened in history, right? In the last 5 to 7 years, Maruti was valued at some point maybe 7 times to the market cap of Tata Motors. So it's come a long way, now almost at par. Why are we seeing this with Tata Motors? I think that's the question most of our viewers want to know. And also, let's not forget, Tata Motors has done a 1,200 times return in the last 4 years, since calendar year 2020, years, versus Maruti that's gone up 2.5 times. So significant returns. And Tushar and me were discussing how a friend of his picked up Tata Motors at 100 rupees and now is laughing his way to the bank. But what's led to this shift? Sharp turnaround in business. Tata Motors has swung into a profit after many, many quarters of losses. FY19, in fact, is when they posted a 15.7 157 billion rupees of losses versus a profit that we are seeing now. Apart from that, that's of course Tata Motors. The outlook, which Tushar can tell us, is about the SUV, the JLR, so a number of verticals that are doing really well. In defense for Maruti, they seem to figure it out, right? I mean, we've seen that historically. We talked to the management. Their numbers are looking good. Of course, rural is struggling. They've got big plans on EV. Their margins up until this quarter have always historically been better than Tata Motors. Now, whether their good run continues, you can argue that. But in terms of just pricing, Tata Motors, and we're looking at price to book because their earnings have been all over the place in case of Tata Motors, has historically traded at 2 times, currently at 5.5 times, which means you're paying a 180% premium almost to pick up Tata Motors if you're betting on their future. Maruti, on the other hand, still trades close to its historic average. Now, that's the case. It's all about the future, but I don't know whether the risk-reward works in favor of Tata Motors.
All valid arguments in favor of Maruti. Great price-to-book numbers.
No, not going with it, are you?
Always the market leader. Has 3 times the sales of Tata Motors in the last 2 years. 42% market share for Maruti Suzuki to 14% for Tata Motors. But we forget that Tata Motors has JLR. It's a company that keeps on delivering for Tata Motors when everything else does not work. But remember, for Tata Motors, right now, its passenger vehicle business is also working.
On the standalone side.
On the standalone side. So, when you talk about the lows that we saw in March 2020, that was sub 100 rupees. From then, the passenger vehicle sales have come in, and Tata Motors found itself in a sweet spot. The demand, so when the pandemic was coming off, People wanted cars, people wanted bigger cars because of the cash that had accumulated. So the car which actually did not sell a lot previously, the Nexon, became the money spinner for them in India.
But I just want to come in on this because I've looked at Tata Motors numbers over the years, and you're talking about 2/3 of the revenue that comes from Jaguar Land Rover. At one point, all of the profit coming from Jaguar Land Rover, and we've come back to a quarter in the third quarter, Tushar, where you had 16+% of EBITDA margins for Jaguar Land Rover. Not seen something like that for the longest time. And Chery Automotive, its joint venture in China, also firing on all cylinders.
So China's sales are also up. Where also at a time when we have seen EV sales actually declining both in China as well as in US and Europe markets. And that actually, in a way, has worked in favor of JLR because as of now, it does not have an electric car. It has the I-Pace, but it does not sell so much. Their more mainstream Range Rover electric vehicle will come in the next 1 year. So JLR gives that profitability angle to Tata Motors, which actually helps the group company at
Just a very quick
So,
one.
but what's the crux? What's the crux? Who
wins?
Yeah, who wins?
I'm going to quickly slip this in and we can continue with who's the crux. As of yesterday, Tata Group, guys, so when we talk about Tata Tech, we're talking about Tata Motors today, has crossed 30 lakh crores of market cap. So this is the first Indian conglomerate to make that historic level. And today's conversation clearly revolves around two Tata Group companies.
So, but then the bet is whether or not you would bet on a Jaguar Land Rover, which has a global play, or a Maruti Suzuki, which is moving away from the entry-level segment into SUVs.
Yeah. Sorry, Tushar.
So you never discount Maruti.
And
That's the whole
Shashank
story.
did tell us that he would own 15% of the EV segment by FY30.
Yeah. So 18 months ago, Maruti was a big player in the SUV space. It launches 3 products, is the market leader 18 months later. But we also have to remember that historically, a segment leader in India's auto space has never abdicated the throne. Maruti is a champion for small cars. It will remain the champion for small cars. In the two-wheeler space, Hero Motocorp makes the largest number of small two-wheelers. It keeps on making it with 40% market share. In the premium segment, Royal Enfield is in a Goldilocks zone. Nothing can beat it when it comes to 350cc. Bajaj may launch a Triumph. Hero may tie up with Harley. It does not. So nothing has changed on that fact. So now in EVs, Tata Motors has picked up that advantage with 75% stake. So when we look at the decade going ahead, if Tata Motors builds on that, Maruti will have to play catch up all the time. But if anybody
The bias
who can
is
beat,
clearly Tata Motors.
but if anybody who can beat Tata Motors, it's Maruti because it can come back whenever it wants to.
Yeah, but just 2 points here. One, the passion is showing. 2, viewers need not choose between the two. They can choose both, part 1. But just the 10 more seconds, the narrative around Tata Motors from the time that it went up from those lows,
double-digit
all
numbers.
the way till now. It's the best performing auto stock in 2023. Arguably, it could be the best performing stock as of now in FY24 or 2024 as well. The narrative is so strong around JLR, free cash flow, guidance, etc. It's difficult to beat that narrative for now, at least.
Okay, so you've had the heavyweight fight out of the way. We've moved to the welterweight fight. Unfortunately, we have less time for it, so let's quickly go through it. We've got Neeraj versus Tushar on this one.
It's Tushar all the way. I'm just adding the sprinklers.
It's a conversation. It's also, remember one thing, Tata Technologies is actually a Tata Motors group firm. It's a company that Tata Motors spun off and listed to a blockbuster listing in December, I think in November, end of November, to I think the biggest reception for any Indian IPO till date. We are talking about Tata Technologies as well as KPIT because KPIT, as you mentioned, has gone up 5% yesterday. But we should not forget Tata Technologies at this point of time because it's their first earnings since listing. It was the first Tata Group company to list in the last 20 years or so. So why do we need to have this conversation? Is because of the ER&D space that we have right now. So it's a space that is going to grow at a CAGR of about 10% over the next 5 years to $2.7 trillion in the global space. And global automakers are likely to spend about $1.2 trillion on case mobility, that is connected, automation, shared mobility, and electric mobility. And KPIT, homegrown, Tata Technologies, homegrown, are actually at absolutely well placed to make the most of this interest that is going to come. They are the pure play ER&D companies. We have to also remember that Tata Technologies has clients apart from Tata Motors and JLR from within the company. Air India, it's one of the most critical suppliers to Airbus. Also counts a very small part, does some amount of business for Tesla as well. Tata Technologies. KPIT has well entrenched partners or clients, servicing about 7 of the top 10 OEMs in the country. But what splits them is you cannot have a more close comparison between KPIT and Tata Technologies as far as the numbers are concerned.
Q3 numbers. Let me run through this very quickly. About 1,250 crore rupees for Tata, KPIT on top line, 1,290 crore for Tata Technologies. EBIT margin stood at 16.59% for KPIT, 16.23% for Tata Technologies. And the bottom line is 156 crore rupees or thereabouts for KPIT and 170 crore for Tata Technologies. Comparable to say the least, 37% guidance of growth for top line for KPIT.
That's the part where KPIT trumps Tata Technologies at this point of time. They guided for 37, they revised higher at a time when the wider IT ecosystem has declined. We are looking at ending the year at about 5 to 6%, TCS ending the year at 5 to 6%. A KPIT is saying we'll beat 37% and grow at almost 40% in this particular year. So you see the opportunity that happens. Tata Technologies does not give a guidance, but going by the numbers that we saw in FY23, that's 24% year-on-year growth, anywhere in excess of that. Again, you're still beating that. So we have to see all of this in the context of what ER&D means to the IT services space.
What about valuations for both?
I was coming to that.
Yeah.
I was coming to that because, and this is also data Tushar has put,
but
that's why, and that's the reason I'm saying it. 59.44 FY25 price to earnings for KPIT and 55.94. So it's comparable. That's the whole point. And
right
here as well, and more than anything else, the point that you will make, why do you want to choose one of the two? It's possible to
Or why
to
not
go with.
shun both simply because the valuations are just
Exactly.
But
egregiously
do you
expensive.
have to shun both?
You don't have to.
You have to.
No, I'm
be
just
a part
posing the
of-
question.
You
It's
have to be
possible.
part of that conversation that's around ER&D.
So
you
And the
can.
last time we had this was when Tata Tech was listing. Remember how KPIT was getting trashed
Absolutely.
just because of a listing?
Exactly.
Yeah.
Great
And
point to
it's,
make.
and it's at life highs yesterday.
I mean, managed to recover
But very
all
expensive,
that
you have to
lost.
admit.
all right. So, but then the jury, of course, ultimately is the viewer and the investor at the end of the day. So you got to tell us which of the two pairs you would choose, or would you bet on all four? Let us know in the comment section.